Ladies and gentlemen, welcome back to the channel. AMC Stock on Friday was down about 0.25% in regular trading, up almost 1% in after hours. This week is going to be incredibly volatile, and we will go over briefly what is I shall say, the major events that you need to know, a little bit of my expectations around this upcoming week, and really the significance of Monday for small and mid-cap stocks. But we are just going to focus on what is happening with AMC here in this video. What the data looks like, what the situation currently looks like for AMC, any and all news that you need to know in regards to AMC stock. In the next video, we will be going over a price prediction and more specifically what I think about these major events. So stay tuned to the channel for that one. But first things first, hit the like button and subscribe to the channel. Let me know what you think about this information and let's get started. So first up, the Ortex data. Keep in mind, I think these numbers are false, but I do think the short interest is likely to continue to grow. Short interest at 10.47%. You're starting to get high again. At one point, you were at about 7%, which nobody really turns their head for 7% short interest in terms of a potential short squeeze. 10.5% starting to get up there. Once you start to get like 15, 20% short, then you start to, have AMC stock potentially become on people's radar again for a short squeeze. So 10.47% short of free float, 107.04 million shares or dollars that are currently sold short in AMC stock, 1.39 days to cover, 26.23 million shares currently out on loan, 23.53 million shares currently out on loan, 26.23 million shares currently sold short, 1.07% short cost to borrow, 35.56% utilization, and 58.29 out of 100 for a short score. So although these numbers don't look too attractive, they are improving and have been improving for quite a bit. Option activity for the last week, you have seen 24 orders totaling $2.33 million with a positive order value of 7%. This is option activity from hedge funds and institutions. If we take a look at the stock twits data here, take a look at the sentiment as of the last record. It's at 60, so that's better than yesterday's 49. So can't complain too much with that. Message volume, though, is extremely low. Yesterday was at 22. Today it's at 10. I think a lot of this has to do with it just being the weekend. On Friday, you had a lot more message volume and message activity overall. I want to see what happens come Monday, but so far people look pretty bullish to start off this week. And the participation ratio looks pretty good as well, sitting at normal at 53, almost in the high range. So that's good. Just means more people are talking about AMC in general. So that is, I would say, overall good news. We did have the latest AI investor sentiment survey that did come out. As I went over, you're starting to see more investors than what we've seen in a long time being neutral. So, 26.1% of investors are bearish, which is higher than where you were to start January. January 3rd, 2024, you were at 23.5%. Now you're at 26.1%. So you've risen a little bit, but take a look at the neutral investors. On January 3rd, 2024, 27.9% were neutral. Now 34.6% are neutral. So that's quite a jump here. The bulls have also fallen quite a bit from 48.6% to 39.3%. So people are getting a little bit more neutral here, slightly more bearish. But yeah, the bulls are definitely collapsing almost 10% in a month. This seems to be the process in which that happens before you do start to see a broader kind of pullback in our markets, and just judging on where the index is, right, the SPY at all-time highs, makes for an interesting situation. Now for this upcoming week for AMC stock specifically, you got about 4,400 calls currently in the money, 42,000 calls out the money, 20,000 puts in the money, and 25,000 puts that are currently out of the money. So surprisingly, it's pretty neutral overall, about 45,000 puts for this week and about 46,000 calls for this week. Now I do expect that we will see more option activity as we actually start the week. You tend to see a lot of people just continuously buying those weekly options, and we'll have to wait and see how everything does populate here, but I expect there's going to be a lot of option activity as this is going to be an incredibly volatile week in our markets. Keep in mind for this week as well, we do have the 10 and the 2-year yield curve inversion that has been inverted since July or so, early July of 2022. So you've been inverted like 18 months or so, give or take. And you just as of about July of 2023, so about 1 year after the start of the inversion, you did hit the most inverted point that we have been, and you were inverted over 1%. Now, you're only inverted 0.19%, about 19 basis points. So you have been uninverting for a while here. And with this upcoming Fed meeting this week, you could actually see the yield curve go positive. That could cause a little bit of fear in our markets. Typically, when that happens, everyone starts looking ahead for an upcoming recession. Now, if investors start looking ahead for that upcoming recession and, stocks are trading at all-time highs, the markets might be pretty displeased with what, can transpire because of that. Typically, the yield curve has always predicted a recession. And normally, when you actually uninvert from the inversion, when you actually go positive here, is when you are really on a recession watch, if you will. So definitely something to be watching for. Coming Wednesday specifically with the Fed meeting, just one day where 2-year treasury yields fall more than 10-year treasury yields, you're going to likely see an uninversion or very, very close to it. I think there's probably over a 50% chance that we could actually uninvert coming this week. So the Fed will give us the press conference, the report, coming January 31st. That is going to be this upcoming Wednesday. There's a 3% chance the Fed could cut rates. If the Fed were to surprise the markets and cut rates, that would be a bearish thing, right? The markets would say, why? If we were not even expecting it, why are you cutting rates? So I don't expect that's going to happen, but I guess you really truly never know when it comes to the Fed and Powell. 96.9% chance that we continue to see a pause. For March 20th, it's a bit of a toss-up. We're currently expecting a continued pause. 52.3% chance of a pause, 46.2% chance of a rate cut. So some people still expect we could potentially see a rate cut in March, especially when you look at someone or a firm specifically like Goldman Sachs. This was posted by Carl Quintanilla. I don't know if I said that right. He is the host of CNBC. You've seen this guy probably hundreds of times. He says from Goldman, we continue to expect the FOMC to deliver a first cut in March and 5 cuts in total in 2024. The main reason is that progress on inflation has already surpassed the threshold the FOMC has given. The labor market could still provide additional reasons for the FOMC to cut sooner rather than later. So, and this just came out literally last night at 9:25 p.m. Pretty weird to see them even put out a note on a Saturday. But yeah, whatever the Fed says, whatever Powell says on Wednesday is going to affect what the markets price in for policy, right? Essentially, we could either definitively price in a rate cut in March, or we are going to continue to price in a pause, and it will affect the yield curve. It will affect markets' interpretation of the economy and how the economy is doing based on what the Fed says, and it will change the probabilities for recessions. More rate cuts, lower chance of a recession. Less rate cuts, higher chance of a recession. And then for December 18th, we are currently pricing in 6 rate cuts with 34% odds. 5 rate cuts are priced in at 33.2% odds. So you're right here, neck and neck between 5 or 6 rate cuts. I really don't think that matters all too much. As long as the Fed doesn't signify that we're not even going to get 5 rate cuts, then I think we're not going to have much of a problem there. Big story as well is going to be earnings on Monday. Significant earnings for small cap stocks. Supermicro is the largest component of the Russell 2000. So super micro, whatever happens there is going to move the broader, like say Russell 2000 IWM ETF, which will have a big impact on AMC stock. Now, SoFi as well could also have a sympathy effect on the broader kind of small and mid cap ecosystem. So that's Monday's going to be a big day for small cap stocks. Tuesday is going to be a big day for mega cap names, for chip names as well. Super micro mixed with AMD. Yeah, you're going to be affecting NVIDIA for better or for worse, and obviously AMD and some of the other smaller chip companies as well. So definitely going to have our hands full for earnings this week. Wall Street's not even going to be able to process all of these earnings and data even this week, and the Fed. Yeah. Wall Street's going to have a tough job on their hands, that's for sure. Tuesday, like I said, Microsoft, AMD, Alphabet, Starbucks. Tuesday, pre-market, Pfizer, GM, UPS, JetBlue, Marathon, MSCI, and the Pulte Group. Wednesday, Qualcomm, in after hours, Boeing, Novo Nordisk, Phillips 66, Roper Technologies, MasterCard, Thermo Fisher, and Boston Scientifics in pre-market. Thursday, pre-market, Altria, Royal Caribbean, Peloton, Merck, Honeywell, Tractor Supply Co., and Stanley Black & Decker. Thursday after hours, Apple, Amazon, Meta, Skechers, Decker Brands, and Microchip. Friday in pre-market, Exxon and Chevron, and then a bunch of pharmaceutical companies, Bristol Myers, AbbVie, Cigna, Regeneron, then you have Charter, CBOE, AON, and Grainger. So yeah, lots of big earnings this week. Expect a ton of volatility. Everywhere you look, there's going to be volatility this week, even down to the calendar, the economic calendar. There's going to be a lot of data coming out as well. Let's take a look at Monday. So Monday, you really don't have much. Monday's going to be the slower day out of them all. Dallas Fed manufacturing is expected to come in at negative 23. Last month you were negative 9.3. Tuesday, you are going to get a lot of data out of Europe. At 10 o'clock in the morning, the JOLTS job openings will be coming out, expecting 8.69 million. And then Dallas Fed Services Index, a bunch of other smaller data points there. Let's see. And that's pretty much it for Wednesday. You are going to get some inflation data out of Europe and countries like Germany. And then the big story is obviously going to be Fed Jerome Powell. Thursday, you are going to get initial jobless claims, unit labor costs, continuing jobless claims, ISM manufacturing PMI. So that's going to be a big one. A lot of Wall Street is paying attention to that, considering a lot of your manufacturing indexes have been showing real weakness. Regional ones, the Fed surveys. We want to see, does that actually get reflected in ISM numbers? Because, I mean, if they do, if you do start to see some really bad numbers there, then it's going to signal a broader slowdown, not just like maybe the cold weather we've experienced recently, having a short-term impact on those manufacturing indexes. Now, for Friday, you are going to get the non-farm payrolls report, expecting 178,000 job ads. We'll see what happens with the revisions from last month. If you do get revised down big, we've seen revisions over the last 12 months or so. That typically only has happened right before you do go into a recession, or at the very least when you are seeing weakness in the economy and in the labor market itself. Unemployment rate is expected to spike to 3.8%. So there you have it. As far as AMC stock, You're currently sitting at, multi-year lows. Let's just be honest there. Sitting at multi-year lows, depending on how the markets kind of evolve this week. AMC stock could make quite a big move. And we'll talk about actually what I expect as far as price action for AMC in the next video. But you're not in a very pretty place. Even since Adam Aaron made that X post, that Twitter post about AMC stock basically getting destroyed, the stock was at like $4.40 or so. It's at $4.10 now. It's gotten much worse. Another almost 10% drop since he made that post. I am starting to expect, even more so now, that Adam Aron will give us a commitment to not diluting shareholders. You have to at this point, right? Just mathematically, you have to. There's no way you can ever pay off your debt if AMC stock is $4 per share. And it seems like shareholders have forced that on Adam Aron and AMC. They don't want to give us a commitment that they're not going to dilute shareholders. They just really, let's be honest, they don't have a whole lot of choice. If they do, for whatever reason, AMC stock is probably going to fall to about $2 per share. Keep that in mind. That is a possibility that could happen in this upcoming week as well. The RSI for AMC is 24.47. You have been oversold for a very long time. In fact, for all of 2024, you have been oversold. So let me know what you think about this information down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.